So now that we've covered the three components of my TFE strategy, which is timing, fibs, and EMAs, we're going to go over a few examples of what it looks like to use these three things in combination to take trades, and also what I look for when I'm looking for an A plus setup in regards to the TFE strategy. Now, if it's not an A plus setup, you can still take it, you just need to be aware of that. So for example, if it's more of a B plus or B minus setup, meaning not all three of the things line up together, timing, fibs, and EMAs, then you can still take it, but just be aware that maybe you need to decrease size or have a tighter stop loss, considering it could be more risky. Not all things are in your favor. So when I'm looking for an A plus setup, I want all three things lining up in my favor to give me even more confluence and confidence when taking that position. And that's typically when I add more size and I'm using more contracts because I am more confident. Let's use BABA as an example today. So I'm going to go ahead and zoom in and show you guys that this was a great reversal play. So anytime that you're looking to play reversals, the EMAs are going to be your best friend combined with all the other things we talked about, right? Timing and fibs. So TFE can be awesome when looking for reversals. I know a lot of people don't like the reversal strategy, but if done right, it can be very lucrative. Now, there will be days that you just sit there looking at the screen, or maybe you constantly keep having to move down your alerts because you don't get that reversal, and that's okay. If you don't get the reversal, you don't take a trade, and you just wait the next day. You have to be okay with missing out on moves and not wait till the end of the day and look back and like, oh, I should have just went short. It's always easier in hindsight. So we'll use BABA as a perfect example because I actually did not take this reversal. Even though it still was a solid trade, it was not an A plus trade, so we'll cover this first. So let's check off our first box, which is T, timing, and this is the reason it was not an A plus trade. So it was about 12:25 on a Friday, and typically I do not trade after lunchtime on Fridays because we just see more chop and lower volume. And so that was the only thing making this not an A plus trade for me to take. And I wasn't watching or paying attention, which is why I missed it. But looking at it, it actually played out very well. So the only thing missing, which would make this like a B plus trade, is the timing portion. Since it's during lunch, I would have been more cautious taking the crosses because you guys know we can get a lot of fake outs. Now, fib wise, fib would have been my target, and you can see we moved right up to the target, which was 81.57. Once we crossed, I would have just been targeting the fib above, which you can see we hit nicely, and now we are moving back down. So fib I would have used as my target to the upside. We weren't near any fibs to use as support, but I'll show you just in a second looking left on how you could have looked to see potential buyers here. And then the last part of this would be the whole reason that you enter the trade, which would be the EMA cross. So the E in TFE is going to be very, very important for you not to bet against trend. We've talked about that. So this cross right here where the orange crossed over the blue meant that we were now in a reversal or possible reversal, and this would have been a great time to enter calls, risking low of day, targeting the fib above. So this was a great example of how even not A plus trades can still be very lucrative. You just have to be in the back of your head very cautious on this cross and saying, okay, I do understand that this cross is during lunch. I'm not going to have as much confidence here, but it still could play out in my favor. And then just making sure you're moving your stop up underneath that 9-day EMA, because as you can see, once the fib target got hit, we are now selling off back down. So looking left really quick, just zooming out in the 5-day, 5-minute, you can see that we caught support here and here. So we were coming into this support. You can actually draw zones, and we will get more in depth into drawing supply and demand zones in a little while in the program, but I just want to do a rough little box here. This is not the best box, but ideally you can see a range here where we caught some buyers, yes, a little bit lower, but typically we caught some buyers here, started to reverse up. We caught some buyers here, started to reverse up, and sure enough today, once we came back into this zone, which I promise we will get to the point in this program where I do explain in depth how to draw more accurate supply and demand zones, this would be considered a demand zone. We dipped in, found buyers, and moved right back up to that fib for a great reversal trade. Now, not only was it a great reversal trade that day, it was also a great reversal trade this day as well. So let's go look at what happened. So we saw a cross down at around 10 o'clock. You could have played short right into this demand zone, or you could have waited until we crossed back up, caught buyers here, crossed up, and played calls back to high of day here. So this would have been a great trade as well. You can see we were acting as a magnet on this fib. So every time that we hit this demand, we were right back to this fib level. When we got too far from it, rejected high of day, we went right back to the fib, but this time we formed higher support over. So that was a really good sign for continuation to the upside. Okay, so we're going to use TFE on AMD for March 10th. I picked this day because yes, we were choppy, but there still was some great opportunities if you were using the TFE strategy. So first thing we're going to look at is, are we after the first 30 minutes of the day? So the first 30 minutes, you can see we tried to move up after this drop down to this fib at 81.55, wicked off, moved into micro range, caught resistance. So this would have been a nice put trade. As you can see, we failed the cross, which meant trend was still down. And we ended up making higher lows, which is actually a bullish sign. So at this point, what I started to look at, because I did take this trade, is we were making higher lows. Now I'm going to bring in the rule of threes, which is just a random rule that I have. I've mentioned it randomly in the course, but rule of threes just means you're looking for 3 hits on a trend line. Typically, this is 1, 2, 3. So it's 3 attempts to take out this higher low here. And a failed attempt to take out this higher low meant that we're still building to the upside. So 1 try, 2 try, 3 tries, we ended up making 3 higher lows, and then boom, we moved to the upside. Also in combination that the fact we were moving into 11 a.m. reversals, and we saw a cross up, this was a fantastic risk versus reward trade for calls to the upside. Time of day, we were after the 10 o'clock, but we were also nearing 11 a.m., like I said, which is a great time for reversals. We were down, looking for reversal up. That covers the T part. Then we move into fibs. So for Fibonacci, we came down and we didn't even really touch 81.55. We shot right back up. So at this point, we weren't near any fibs, but you could have still used them in relation to, okay, looking on a target for the upside, we could target micro range. If we held here, then we can target the next fib at 85.54. So fibs played more of a part in targets rather than support on this trading scenario. And then E for EMAs, which is that important part of waiting for the cross. We saw the cross here indicating trend was turning up. Could have taken calls. And if I took calls right here, my risk level would have been either, depending on size, if I had a ton of size underneath this candle right here, or if I wanted to be a little bit more flexible underneath this higher low of the day right here around 82, which looking right, you can see we actually came back down to test that towards the end of the day. An awesome opportunity to flip to the downside and catch puts if you missed the calls on the way up, or if you just wanted to be a ninja and flip and play puts also on the way down, that would have been awesome. So let's look at the opposite side of the trade. So let's say that you missed this call trade. You were looking that we were catching resistance near high of day and near this fib, and you were looking for a retracement back down. This move happened so fast, if you would have waited for the cross, your entry would have been right here, which isn't horrible, but it's also not the most ideal entry. And I also want to highlight we were going into lunch. So me personally, I don't consider that an A+ trade because we were really far from EMA, so we weren't going to get an accurate entry when it came to the cross for the E. Timing of day, we were moving into lunch. I typically don't like to trade lunch lull. So those were 2 right off the bat for me. And then in regards to fibs, we were actually in the middle of the micro range and these fibs. So overall, I would have not taken this trade. This would have been a very like C- trade. What I could have done is waited. And this right here, 12:35, is still during lunch, but coming outside of lunch around 1 o'clock, I could see trend rejected to turn up. We rejected micro range. We were still in a downtrend, and I could have played continuation on that downtrend back to somewhere in here. So right here or right here were 2 areas where we attempted to break low of day on this trend line. We failed. Buyers were present here and here because we saw a big move to the upside. This will make more sense when we cover supply and demand. But just basic lines here, guys. You can draw a line off of this candle, and then you can draw a line off of this candle, and then look where we caught support in this range right here. So then puts would have worked to this range. If you missed this and this, you could have looked for your end of day play when volume started to uptick again, which looked like a cross up for calls right back to wick near micro range. This wasn't as big of a move, but there still was money to be made. Oxy is another perfect example on how if you want to play reversals, the EMAs are going to be your best friend. So there are two ways to play any type of trade, right? You can be a reversal trader or you can be a continuation trader. So a reversal trader looks to trade when the stock starts to reverse off of its current trending move. So for this case, Oxy was trending down, and let's get a little bit more zoomed into this. Oxy was trending down, and therefore if you are a reversal trader, then you are waiting for the EMAs to cross to then see a reversal back to the upside once trend started to get exhausted. Now, if you're a continuation trader, you see that we are trending down because the orange is under blue, and you want to get a piece of this move to the downside. So let's use an example on TFE using both continuation trades and reversal trades, and how you could have played it either way this day. So let's start with reversal trades. If you were looking to take a reversal, then with TFE, you should have been looking around 11 a.m. before lunchtime to see if we saw any type of reversal action. So that was right in here. So we actually attempted to cross. We semi-crossed, but I hope you guys are seeing right off the bat what I'm going to say. There's two things I'm going to say why it's crucial to use this in conjunction with market structure and fibs, micro ranges, support and resistance, right? So we are in a micro range, and we were still making lower highs. We attempted to break lower highs, which we partially broke this trend line, but we were still getting caught in this micro range. So we almost crossed. I mean, if you zoom in, let's see how far we can zoom in here. There we go. We temporarily crossed on this candle, but this can be why it's super helpful to wait for after we see the cross happen. We've got a 5-minute candle over on the cross. Wait to see what the next 5-minute candle does. So hypothetically speaking, let's just say, no, Brittany, I saw it cross. You told me when they crossed at 11 o'clock, we're reversing up. I took calls, and then I lost. What did I do wrong? Why didn't it work? So let's say that you took calls off of this cross, off of this candle. You entered in, and the next thing you know, we are hitting the top of this micro range. There should have been two things going through your head. Okay, we're in a micro range. I'm still going to take calls because I see us crossing up, but I'm going to be aware of the fact we're in a micro range, and so if we start to reject and move back down, I'm going to immediately stop out. So this should have been at most, break even, or maybe a small paper cut loss if you executed properly. When I say execute properly, let's say you bought calls, you were recognizing that you were wrong, the move was not actually reversing up, this was a fake breakout, and then you could have just flipped to puts once you saw this big red engulfing candle and a cross back down. And if you would have done that and held the trend, I mean, we held underneath orange under blue all the way until 55.51, you would have more than made back all of your losses and probably tripled your money. So the big lesson here is either give yourself extra confirmation and patience, wait for that second 5-minute candle to print after the cross has happened to make sure that you're not getting faked out, but also make sure you're paying attention to other things rather than just looking for an EMA cross so you don't get faked out. Because for me, I would have not taken this cross because we were in micro range. I would have needed support to be holding over micro range with a cross for me to take calls back up to the fib above. So let's look at the actual cross play that happened for a reversal that would have actually paid very well. It was later in the day, and so since we failed to cross at 11 o'clock, that should have been a signal to you if you were looking to trade a reversal that day that, okay, I'm not going to do a reversal. We failed at 11. I'm going to go take a lunch break. I'm going to get off the screens, and I'm going to come back after lunch around 1 o'clock to see what happens. And sure enough, right into 1 o'clock, what happened? We finally got a cross up with a big green candle, but we are in the exact same scenario as up here. So you're most likely hesitant because we're in a micro range. But look what we did. Once this candle printed, big green candle, another candle over the top, and then we just started to move right up to that fib above. So this was a very clear signal that this cross was valid. It was after lunchtime, so timing was on point. EMAs helped with targets from above. We also formed higher support over this micro range, so fibs were on point. And we got a very clear EMA cross after an all-day meltdown. So this was the perfect reversal trade. Okay, so now let's look at the continuation trading. So let's say that you wanted to get a piece of this downside move. Personally, if you're looking to play continuation on a downtrend, then at 11 o'clock, when the reversal trader was looking for reversal, You could have been looking for the opposite. You could have been looking for the rejection of the cross at 11 a.m. to play the continuation on downtrend into lunch. It's as simple as that. So this is why it's actually really cool to see both sides of the story. So if you are having the mindset of a reversal trader, try to also think like a continuation trader, and then vice versa. So a continuation trade would have been the rejection of this reversal right here at 11 o'clock. We had this big red candle, so for me, I probably would have entered somewhere in here, or you could have waited for a new low of day break, which was right in here. So right here, we had a new low of day break on this candle. We tried to move back up. We wicked underneath this red line and then continued down all the way to micro range. We were still moving down. We almost hit the next fib at 55.32. And then I would have made sure you were exiting once we crossed. That's your exit. So if you're playing continuation on trend, you just want to make sure you exit your position when we start to have those EMAs cross, because that is most likely the opportunity for reversal traders to come in and get the other side of the move.